If I told you Amazon recently raised prices by um, 67%, not to make you pay more, but to basically beg you to watch ads, would you believe it?
I mean, it sounds completely backward, but honestly, it's the exact reason investors are absolutely thrilled right now.
Right, so today's deep dive unpacks this whole counterintuitive strategy from our sources. We are looking at why Amazon's price hikes are, well, a masterclass in leverage, and why tech and entertainment giants like Netflix, Disney, and Apple are just powerless to copy it.
Yeah, because to see why they can't just mimic this playbook, we really have to look at how you, the user, actually interact with these platforms.
Okay, so think about Netflix for a second. Netflix operates like a boutique store. You walk in specifically for the content. If the shows are bad or the price creeps up, you just leave.
Exactly. The exit cost is zero. You tap cancel on your phone, and 30 seconds later, you are out.
Right. But Amazon isn't a boutique. It operates much more like a utility, like water or electricity. You aren't just going there to watch a movie.
No, you're driving on their infrastructure to get your groceries, your photo storage, and of course, your 2-day shipping. Leaving Prime Video means getting off that highway entirely,
You sever your ties to all those physical conveniences.
which completely flips the economics of streaming.
Wait, if people are subscribing primarily for the shipping, that means Amazon's user acquisition cost for the streaming side is, essentially zero.
It really is. It totally breaks the traditional streaming business model. It is the difference between content-driven growth and infrastructure-driven growth.
Oh, wow.
Because Prime is a utility you rarely log out of, Amazon doesn't just own your viewing time. They own your wallet.
But let me push back on the advertising side for a minute. Netflix is launching its own ad tier now, right? And Apple obviously has unparalleled device data. Why can't they just build their own targeted advertising models to compete?
Well, they can target ads, sure, but they can't close the loop. Think of the underlying mechanism here. If you see a hairdryer ad on Netflix,
Okay, a hairdryer.
right, the advertiser is essentially just buying brand awareness. They are crossing their fingers, hoping you remember that specific brand the next time you are at the store.
Right.
Netflix can only really prove a certain number of eyeballs saw the video.
Oh, I see. So Amazon isn't selling the eyeball. They're selling the checkout.
Exactly. You see that exact same hairdryer ad on Prime Video, and you don't have to remember anything. You can click Add to Cart right there on your screen.
And just have it on your porch tomorrow.
Yes. The entire chain, from seeing the ad to buying the product, happens entirely inside their ecosystem.
And a wild.
That trackable, direct return on investment is why advertisers pay a massive premium. And, this is the engine behind their whole flywheel,
The ad tier generates massive revenue, which funds better streaming content.
which keeps you renewing your Prime subscription, which keeps you buying physical goods, which drives even more ad views. The cycle just feeds itself.
Right. Which brings us to the logistics.
Mm.
Because this whole closed-loop flywheel sounds incredible, but it relies entirely on a physical foundation.
It does?
Like Apple and Disney have massive digital ecosystems, but they don't have the delivery trucks.
They lack the dirty work. Apple, Netflix, Disney, they live almost entirely in the digital realm. What they lack is a 20-year, heavily capitalized global physical delivery network.
Right.
That heavy logistics network is the ultimate uncopyable moat.
So that's why Amazon can afford to hike prices and even lower video quality without a mass exodus.
Yeah,
At the end of the day, you still need your paper towels delivered.
you do. Which means investors should completely ignore how many Oscars or Emmys Amazon wins. The real metrics to watch are Prime renewal rates and quarterly ad revenue growth.
Which have been spiking recently, according to the latest data.
Exactly. If those hold steady, the physical moat is successfully protecting the digital business.
So here's something for you to chew on. If physical logistics is the ultimate moat for a digital ad business, what happens when companies like Uber, DoorDash, or Walmart realize they have the exact same utility connection to your life?
That is a fascinating angle. Could the next major streaming giant actually be a grocery delivery app?
It's totally possible. Well, before we wrap up, a quick reminder. This deep dive represents a breakdown of business logic and is not investment advice.
Right. Markets carry risks, so always do your own independent research before making decisions.